When Dollar Tree reported 4 weeks ago, their same-store sales and net revenue came in a bit weaker than expected. However, their margins, remember what I told you, that's what people want, held up much better than feared, resulting in a terrific 23% earnings beat off a $1.78 basis. According to management, shoppers aren't batting an eyelash at the new $1.25 price point, and their guidance was solid, too. Stock barely budged on the news. It only caught fire a few days later when we learned that the activists at Mantle Ridge were effectively taking the reins. Dollar General reported a couple of weeks later, and their results were a lot less encouraging. Weaker than expected sales, weaker than expected gross margins, and only a tiny 1-cent earnings beat. While Dollar General's guidance for the current quarter was outright bad, their full-year forecast was much more bullish, that's very unusual, which allowed the stock to actually rally in response. Doesn't hurt that they got an aggressive expansion plan that Wall Street greeted with enthusiasm. And, of course, this is what you buy, needless to say, as I said at the top of the show, when people think we're going into recession. They trade down. Stock jumped from 212 to 230 over the next couple of days. Let's pull back to the low 220s since then. How about valuation? Dollar General, slightly cheaper, 19 times this year's earnings estimates versus over 20 times for Dollar Tree. They both have similar size buybacks. Dollar General is still the only one that pays a dividend, and they just raised the payout by 31%. But even then, it still only translates to about 1% yield. Where do I come down? Here's the bottom line. If you want a consistent operator that doesn't need to do anything too crazy to beat the estimates, well, that's Dollar General. Even though they're lowering prices, I think that's a good long-term strategy to win over customers. Dollar Tree is more of a high-risk, high-reward turnaround play, where the stock could have a lot more upside if they pull off the execution. But if they screw it up, you can kiss your gains goodbye.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.
Shepard Smith here. Thanks for watching CNBC on YouTube.